let's take a quick look at our conversation with Samvardhana Motherson, which is in focus following its Q3 numbers. Listen in.
This is clearly an opportunity for us, especially when you think from a medium-term perspective. Given the global presence, actually, we have more than 400 facilities across the globe, so a fair amount of spread across 45 countries. So you're right that we can recalibrate / rejig our production plan depending upon putting them into more favorable jurisdictions, depending on how the tariffs play out. Also, I think do bear in mind that a lot that we buy is also pass-through elements to it. So commodities are pass-through elements to it. We do have custom-nominated parts which would also have pass-through elements to it. And the remaining that we procure, we try and localize it as much as possible. So implication in any case is not going to be as much. But then, as I said, over a medium term, the ability for us to recalibrate ourselves is a lot more than some of the other players which may not be as global.
Now, my second question to you is, moving to this particular quarter, we have seen, I want to just start with the wiring harness business because it's seen a strong margin expansion in a demand environment which has not been very strong. What led to this, margin growth?
You would have seen that the teams have been continuously working and striving very hard globally to make the improvements. So this is a result of all-round operational improvement. Wiring harness is a human-intensive industry, and Motherson is extremely focused on developing human capital around the world. After COVID, there had been a lot of issues, and over a period of time, we have tried to build a very robust manufacturing setup. Apart from that, there has been a slowdown, which did impact us to some extent in some of the geographies. On the other hand, we had won some businesses 2 years ago, which have come into play today. So we have been able to optimize the manufacturing setups and to provide solutions. On top of that, we have also been continuously insourcing some of the products which we were buying and providing better solutions to our customers. So all this on an overall basis resulted in a better performance.
I just want to understand, from both of you that you've given some commentary in your presentation that, the global PV volumes have declined by 1% in this particular quarter compared to the same time last year. The CV business has also seen a degrowth globally. While, we have seen markets such as Europe as well as North America decline in this particular quarter. What is your current understanding of, your reading on Europe specifically? Because growth, while hampers, it forms a considerable amount of revenue, roughly 17-18% on a full year basis for you. Just want to understand, on that aspect as well as on Japan, because you've seen a lot of acquisitions over the last 12 to 18 months. How does these two markets shape up for you going into FY25 and FY26?
So let me start with Japan. So if you would say that at the beginning of our 5-year plan itself, we had indicated that that's one of the markets where we didn't have much presence. And the customer trust allowed us to partner with Honda. We're very grateful that they did give us the opportunity to have Yachiyo and then Atsumitec in the group. And together we continue to develop. And please understand that these two companies also are not just functioning in Japan, they are global. What the company has done over a period of time is not only doing business with Japanese customers and growing that, which will allow us to also bring in other products which we were not supplying to them today, but we can supply in the future and develop more and more solutions. We have also set up new partnerships, one with Matsuisa, which is for automation, and also on the packaging side with Sanko-san. So we'll see that how we are using every market to also improve our operational performance and strengthen ourselves end to end. So that's been the basic drive. The Japanese have very good manufacturing knowledge and innovation capabilities on the production side, and the group wants to strengthen that and take it global. Kunal, would you like to add on to Europe?
Yeah, so look, I think in Europe, you're right, things have looked a little downward. But we don't see it as a very deep end of the ocean. We see it as a shallow piece which will play itself out. There is always pluses and minuses that occur. If you think from a customer perspective, some of the European customers have been challenged by different powertrain requirements that the regulator has been putting in place, and the challenges associated with putting all of that together, as well as trying to invest in newer technologies for the future as well parallelly. So as some of that has happened, if you think from a consumer end also, there is a lack of clarity on which powertrain is really going to be playing out. And hence there seems to be some deferring of purchases happening in there, as well as potentially, going after not wanting to deploy large capitals behind a powertrain because, you really still do not know which is going to be the right powertrain to back upon as a consumer. So there seems to be a period of volatility in there, some amount of flux, but we do think in the next few quarters things should start looking a lot more stable. And then it's an important market. It has a lot of engineering capabilities, quality capabilities. It's not that Europe's not growing. I think if you especially think from Eastern European perspective, there is a lot of growth in there. There still seems to be a challenge on finding people to work. So inflation continues to play out, which means demand is going to be still resilient. And hence, at an aggregate level, we are not too worried about it. It seems like more of a short-term volatility or pain, which will ride itself out. And a diversified model implies that we are able to react to any of these changes. So we'll play with the opportunity set that comes our way along with it.
Now, just one follow-up here, because we have seen in the last week that major automaker Porsche has come out and has mentioned that they've announced their plans to pivot back to internal combustion engine or ICE vehicles. Just wanted to understand, what is your current reading of this? And because they will be spending a considerable amount on it, I just want to understand any kind of reaction on this for you specifically. Do you also expect the other major automakers to come out with such bold measures? There has been some commentary by a lot of them. Just wanted to understand, because while you mentioned your powertrain agnostic, what does this specifically mean for the auto component makers in general? Because you've seen EV sales slow down in Europe as well as Germany as well.
Well, it's good you picked that up. It is, a signs of probably what needs to come. If you look at the different mix of vehicles in Europe, you will see that hybrids continue to be one of the fastest growing segments, which is like an intermediate solution between the full ICE and the EV. Having said so, it's really an ICE vehicle at the end of the day with the battery attached. That's what a hybrid is. And hence it carries best of both worlds, but from a component player probably carries a good amount of content as well for players like us. Secondly, I think, as I just mentioned, people are trying to find their feet around what is the powertrain of the future. I think everyone's belief around EVs and the high trajectory of penetration that EVs can have, I think that's been dented. And hence OEMs pretty much across the board will be relooking at their portfolios to say how much we should be investing in which kind of powertrain going ahead as well. So I think Porsche has made that step already, and I would think many more may follow through as well.
Now, for SAMIL in this particular quarter, we did also see that you guys have reduced capex by roughly 500 crores to roughly 4,500 crores now for FY25 specifically. I just want to understand that while the non-auto capex is expected to continue in verticals like consumer electronics and logistics, for the auto capex, will it be safe to say that it will be looked at in the next few quarters at that time, and shouldn't just be assumed that it will happen just because it's been announced? So will it be more on a basis at that time? What is the demand environments for you specifically that you're seeing?
Which is right. I think we will breathe with the market depending upon how the volumes play out, depending upon when the SOPs are being planned out. This will be done at that stages. So we will react as things come our way as well. This was originally planned to happen in this year. We have seen a lot of SOPs getting delayed, specifically some of the EV players. And hence, as and when there is clarity on that matter, those capexes will.